Good morning. Good morning. Welcome out, everybody. Happy Monday. We're going to give it just a second. You should be seeing my screen. And I've got a few people coming in still. Let's let the stragglers in. Schwab is up and running. Yep. Yep. Seems to be pretty smooth, I would say. Do I have someone in the waiting room? Let me see. All right. Okay, chat is up. Screen is on. Good morning, Michael. Good to see you. Welcome, welcome. And good morning, second Michael. Valadez. Did I say it correctly? Welcome. Great to have you. Good to see you. Stephen, good morning. Yes, sir. Love it. I try hard to get names right. It's important to me. Hello, Bob. Good to see you, sir. Let's dive in. Welcome to the Market Watch Group, weekly opening bell. We talked about the market yesterday. We're coming with a little enthusiasm, I think, that the buyers showed up. we spent a lot of August, September, and most of October wondering where the hell the buyers went. So they and it was interesting because it did have end up ultimately get 2 good days of volume, but the volume wasn't outstanding. I'm okay with that. A couple of good days that moved the needle for us because that will organically, take over now. The volume section of the market posture, meaning in another week or so, there's going to be a couple of negative volume days that fall off, and then there's going to be a couple of more, and there's going to be the buying days that we already had, and maybe we get another one this week, right? But ultimately, when we see that the negative volume disappear and then we have the positive volume, that can organically just shift positively while we wait. We can wait it out and it'll slowly turn positive. Not super positive because it's only a couple of buying days, but enough. So anyways, let's dive into it. My name is Scott, of course, and I will be your host. And here are the disclaimers, and here is the agenda. Opening futures and news. We'll take a quick peek. We'll look at the economic calendar. We'll look at what we said for our posture. Anything that you carried, what would you have carried? Bullish trades, obviously, right? I mean, if you're carrying something bearish, either A, it's a hedge, or B, it got away from you. I think maybe there's something longer term, but that was the biggest 5 days last week we had seen in 6 months, maybe even a year. It was a pretty hefty. Got away. Okay, there you go, press. I love it. Willing to acknowledge it. It's the only way we stop those from happening. Hopefully there's some bullish trades on there as well. Now what is always the question. Now what? Okay, if you still have some bullish trades on, you're going to manage them. If you do have bearish trades on, I've been there. I know what it is. And what are we thinking? We're thinking, well, if we get our pullback, we can at least recover a little bit. It's hard though, because you're going to see the futures are even up a little today. I definitely think that we're coming to an end in this bullishness. I closed most of my bullish on Friday. Anybody else up 8% in a week? Well done. Yeah. Anyone else? What's it look like? Did you close? Are you holding? Is it a little bit of both? We'll look at the opening range, what it means. Clearly, we want to have a visual representation on our intraday charts of what is it going to look like when the buyers fail and the buyers capitulate. And when the buyers capitulate, that's the beginning of our setup. Right now, right now we have set up in the fact that we had a lot of bullish things happen last week, a lot of breakouts, but they're 5 days in now. Could you still make the trade? I mean, certainly, of course you could. What you would need to do is quickly find a way to manage them and adapt the risk. Heiken Ashi, probably even Heiken Ashi on a 4-hour chart where it's like you are moving your stop quickly, and you maybe you could squeeze something. I find that if I'm on day 5, I'm asking myself, why didn't I trade day 1? And certainly, if I didn't trade day 1, why didn't I trade day 2? That's what I would be asking myself right now. Is if I want to trade it on day 5, why didn't I want to trade it on day 1 and 2? What about day 5 is like, oh, now wait, day 5? We just a lot of everyone's saying how much they made last week because they were already in. Not like, hey, let's jump in. Like I said, the cops are already on their way. This party's wrapping up. It's time to go rest and get some late night breakfast. Get ready for tomorrow. Okay. We have a fairly large establishing quote unquote shopping list or short list, which is good, right? We said as our posture improves, one of the things that should be organically happening as well is our watch list should start expanding again. Our watch lists should start to grow in multiple areas. We pared it down quite a bit. We pared it down when things were breaking. We're like, okay, you're out. I have a number of stocks that are just in what I would consider my core. There will never be a time I'm not watching Apple and Microsoft and Nvidia and Amazon, Tesla, right? I mean, I'm going to watch those because they are the market leaders. They also have a lot of options. They're very liquid. I mean, there's a lot of things about those that make them more tradable to us. But now, as we say, it looks like we're getting more bullish. We should be finding more bullish opportunities to consider and expanding our list. We did. We have multiple areas that we think are showing opportunity. Technology, communication services. Obviously, those are the standards. Communication services wavered for a couple minutes because their leaders had some struggles with earnings. Google, Meta, struggled, right? But overall, the group looks okay. We see a reemergence from consumer discretionary. We see financials and industrials again. Energy's not down, Bob said, right? That's correct. We see it broad, and there were a number of factors. Let's just jump in. Let's talk about it. Here is okay, let's start here. The Fed, 37 days. We're about 5 weeks away from the mid-December. Last chance of the year. We will get some inflationary data. I believe it's next week. Right now, we are at a basically 10-1 odds of another unchanged decision in December. Whew, I don't know. The inflationary data would, for me, absolutely have to support that. And I mean support it in a way that's like, where something's in the 2s or at least the very low 3s, and it looks like it's falling again, because right now it looks like it's stalled. And the Fed can't leave it where it is. That's dangerous, I think, for going into the future. So with the employment where it is, even with its having cooled off, and the market the job market cooled off. Yeah, mildly. Tough to hold inflation down with Christmas. The American people are the indomitable U.S. consumer. Like we are willing to spend money no matter what it takes, right? As we watch unhealthy debt levels. Okay. Here's the futures showing a positive open. Is it huge? No, it's 0.1. It's a marginal positive open. S&P is up 0.17. Dow 0.06. NASDAQ 0.18. Russell 0.10. Crude back up 1.5%. Not great. We keep thinking crude maybe is going to settle into like a $70 to $80 range. Yeah, we'll see. Oh, look, Tasty Trade. I thought these guys were bought. Does anyone know? I swear they were bought by somebody. Somebody acquired Tasty Trade. If you trade there and you know, or you heard, let me know. I swear. Stocks tick higher as Fed rate hopes keep lifting spirits. So we're in one of those times when it's just all about the Fed. Oh, what's the Fed gonna do? What's the Fed gonna say? And it's I think it's a tough time because you're just constantly thinking, how's the Fed going to interpret this? Does the Fed, it's like you want a little bit of bad news, and it's tiresome. But it is what it is. That's where we are. Everybody's wondering, is the Fed done or not? I think if we look at the economic calendar, that this week we don't have much. We just have the Fed, right? We have this Fed speaking and this Fed speaking. We have credit and deficit. Nobody cares. Today we have Fed and Fed. We have Fed, and then we have Powell, wholesale inventories expecting to do nothing. And then we have some more Feds. Then we have jobless claims, just the one number, which has been fine. So we're not worried about that. And then we have Jerome Powell at the IMF. And then we have a small, minor consumer sentiment report. So this week, we don't have much to provide us direction other than more Fed. Next week, then we get to Tuesday and Wednesday, we have a bunch of inflationary data with CPI on Tuesday, PPI on Wednesday. So yeah, we're going to just we'll see. But without much to go on, it's easy to run out of steam. Let's take a quick peek at our opening here. You can see already on Friday, we gave back about half the day. We kept the overnight and we rallied for the day. We touched at this resistance level up here, old support, new resistance. We're back there again. And the volume was okay. It was above average, then not, then above average, never by much. 7% above average, 8%. It's enough for me. My threshold's 5. If it's above 5 for the SPY. If I'm looking at a stock, I'd like for above average, I'd want to see, I don't know, 15, 20% at least. I'm not a 150% volume person. That you'll rarely see that. But what are we expecting today? You can see we're overbought on our stochastics, at or near resistance. Already have struggled as we got near this 436 level. I'm going to call it 436, maybe 436 and a half in that area. So we'll see. Pinching a little bit here. What's the thought process? This is the thought process. Man, this looks like a great time to get in right up here against this resistance level. Why did we not? It's like we said, it's either here, and if not there, there. And after that, you're either in or you're not in for this. That's what we talked about, right? And we said the risk is that getting in here, it was like getting in over here. You got what you wanted, and then it fell apart. So you have to be willing to take this to get this. And if you take this and it fails, you have to be willing to do this again. And that's what we're trying to develop, right? Is that consistency. Now, though, it's at resistance. So a lot of people are like, oh, if it's at resistance, are you trading bearishly? I'm not really feeling bearish now. I think we may have a, bull flag type pullback, 2-3 days, mild pullback, and then it wants to take off again. This was a V. Where's my drawing tools? This was a V now. V's are strong. This was a hefty work. In fact, the right side of the V was faster than the left, and the left was pretty fast. 3 big days, then we had a 2-day pause, and then 3 big days. And we've gotten it all back in one fell swoop, 6 days up, bam, really 5, because we're no higher than we were at one point on Friday. So that's a V. That's pretty strong. We did have some volume, and that did score us. I think I only ended up giving it a quarter, but I thought about the half. It almost was even stronger still, and it'll probably go at least to minus 0.25, if not to 0 this week. If it has even one day of good volume, it'll probably drop it to a 0 by next week. We'll see. This was my posture, though. I had one person tell me they're a little more bullish than me, 1.75. Great. I couldn't make an argument that would counter that. I certainly have a couple of things that would be right on that bubble. My long-term improved. We recovered on the long-term. Great improvement on the short-term. We broke the consolidation and we made a higher high. Very nice. Volume got better and is likely to get better again. Major market, we didn't see much there yet. Major market really was showing some equilibrium as we looked at the last 3 months at the Dow, the NASDAQ, the Russell, the S&P. A lot of equilibrium there, not giving us much information. Sector, though, we saw sectors improve, and we saw the VIX improve. The VIX giving us confirmation that the institutions are, they're okay. They're not scared. They were never really that scared, we said, when the VIX was peaking out at 22. Okay, so let's go look at the opening real quickly. And what are we expecting? I think it's going to meander around a little bit for a while here. Remember, we're not going to make any judgment for the first 20 minutes. And then we'll kind of look at it and say, after that, what does that mean to us, right? What you can see already in this first 5 minutes, it ran up and tested just about at this Friday high before it, kind of gave it back late in the day. And it retreated pretty quickly. The closer it got to that 436.29, 436.20, whatever we want to say. My zone is 436 to 436 and a half ish. It got up there, it retreated. Here we are. Yeah, okay. So what are you thinking? If you're in bullish trades right now, you're thinking to yourself, I held it. Was there a benefit? Let's go through the watch list. Did we look at everything this morning? I think we did. I think we looked at it all. Tell me if I missed anything. We looked at the Fed. We looked at Yahoo. We looked at the economic calendar. Yeah, we did. We've looked at the SPY. And let's take a quick peek at the VIX. Always want to know what the VIX is telling us. You can see the VIX is kind of calling for us right there already. We can see it. We're getting that confirmation. So it looks like there may be an upswing here, which of course there will be. It's not the fact that it has an upswing. What we're looking for is the measure of the upswing. Where are some areas that I think might be relevant? I would probably say this 18 level right here. Right. That to me, and it may even start lower than that. It may be in there. That would probably be the range. So if it moves up into this, I'm not going to be like, oh, here we go. I'll be like, yeah, we're getting close. I don't think it's going to do much more than that. And when we see that confirmation come back down, that is a great confirmation. That is the institutions changing their sentiment at 17. At that point, what's our thought? Well, you can see where it goes from there, at least down here, but maybe even back down here. And the thought from there is what we think that there could be a second bounce even into December. We still have that opportunity. Why are we thinking this? Because we might have fallen off the cyclical path temporarily, but you can see how quickly we recovered back in. So I'm just following the signals. And the signals are telling me that the institutions have all of a sudden regained a bunch of confidence. And that the money flow is looking good into a number of different sectors. Is anybody, out of curiosity, did anybody not? And I'm not like trying to start an argument or something. Did anybody not get bullish? Right? Was there anything that you didn't like, out of curiosity? Yeah, certainly weigh in on it. Let's get to the watch list then. Let's look at this broad-based watch list we have. What are we looking for? I mean, look at Apple. I told you that for me, it was a great week, good start. Yeah, for me, this is all the same move, right? So at this point, I'm at this same resistance level. I'm at this same overbought level. My thought is that Apple is now ready for a consolidation of some kind. And when Apple is bullish, you can see the consolidations can be just 3-4 days, 2 or 3 days, sometimes a little longer, sometimes just a couple of days, and then it starts to turn again. Right? There's one right there, just a little bit of a pullback. So do I think it might make a run back down here to this level? Sure. Did that show up? There it is. But it could go like this to 175 and start to turn. Or it could come all the way down here and then it could hold. I've got to be ready for, I don't know. There's no predetermined path. All I know is when it's done at this resistance level, the buyers have convinced me that they're back in control. I'm looking, and the good thing is that we're hoping that it turns into a trend, like back there, where Apple could give us 4 or 5 trades in a row, right? So once we get the first one and that one works, we're like, great, let's look for the second one. So I like what we see from Apple. Remember that we said we need Apple to be in place. That's what we've been saying that since back here when it first had bad earnings, and then like this, it recovered, and then it got this weird Chinese story, like the Chinese government's not letting Apple phones into their buildings, or it was like, then it just disrupted it again. Okay. Adobe looks great, but overbought. That's going to be the theme. Looks great. Buyers in control. We're not like, clearly the buyers are in control of this thing. But that doesn't mean we can buy it. That means that now we wait for the next opportunity, for the next window. It's not when it's overbought over here. It's when this thing pulls back and then decides to make the next run. And that's when we think it has the strength to break to new highs, etc. Same thing here, right? It's a little overextended. It's kind of stalling. There's Aflac stalling, starting to turn over. That's the pattern that we're kind of thinking about here. Big candle, smaller candle, volume dropping, and then all of a sudden the sellers come. And then we see how do the sellers push it? Do they get it down here to 80? That's fine. It's about halfway of that candle. That's probably the first place I would think to find some strength, but I would be okay if this went all the way back here. Still a higher low. So I'm going to be flexible and see. Let's see what the sellers do. That's sort of what we're thinking we're going to be doing here early this week. AIG still kind of holding up. You can see it's pausing. The volume is dropping. I think we're going to see as well. There's Amazon. 3 days now. What's it doing? That's the definition of a resistance level, right? When the buyers run out of steam and the sellers start to come in. Well, if that's going to hit resistance, someone might be like, so are you going to buy puts? Of course not. Look how strong that is. That's strength. What I'm waiting for is for those buyers to take a break. When they take a break, then I'm waiting for these sellers to come in. I want to see how far they push it. And then my trade sets up coming out of that. That's what I'm looking for. Across the board, you can see we've got any number of places. The window is probably going to be 2 to 3 days when we get there. And it's probably going to be across 5 different sectors. So you could have on a number of trades. The question is, does your risk tolerance allow for that? Does your market posture score, does your market posture momentum give any indication of that? APH, this is a new one. We like it. We didn't say we like it because it's ready to trade. We said we like it because of its strength. Now we have to be patient and we wait. This thing got back up here to this resistance level. It certainly broke out of this consolidation. And now, as it's overbought, as you look at your stochastics, we're just waiting for some kind of a pullback. Let's be patient. Don't force trades. Looks good, but overbought. Again, we're going to see this over and over again. Capital One, this is financials, credit cards. We might look at the other ones too. Visa, MasterCard, Discover, American Express. Maybe I'll pop through those here in just a second. Oil does not look so good. Oil looks like it's kind of struggling, even though oil prices themselves were up 1.5%. There's not a direct and exact correlation into the oil stocks necessarily. CPRT, you can see a lot of these are starting to show us those red candles that say, all right, now it looks like the sellers are going to take some profits. It's not even necessarily selling pressure. Like, why are they selling it? It may just be short-term profit takers that are like, hey, look, it made a great run. Let's take some profits off the table. It's not necessarily a bearish sentiment. Sometimes people are like, oh, are they shorting? No, it's most likely just profit taking. CrowdStrike. Love CrowdStrike. There's that first indication that the sellers are starting to come back in. As they do, we get to assess what they're doing. There's CVE, nothing there. Dell is new but not new. We had looked at it before a couple of times. It's a little bit slow sometimes, but once it moves in the right direction, it's a nice one. Home builders, home builders have spiked hard. You can see they finally broke their consolidation and just went, but now we have earnings. So I don't know, maybe earnings brings it back down to a more tradable range. It's a little volatile without a lot of consistency. So I know people are like, oh, don't we like volatile? We like volatile if it comes with consistency. Dow, here's EA. This is Electronic Arts, Communication Services. Nice earnings report, spiked it up, hitting some resistance now. This was the consolidation. So what am I thinking? My thought is maybe that is the next support level that holds. If we see something like this thing pops back down in here and turns. That's the kind of signal we're looking to see, right? We know the buyers have done their job and they're starting to ease off. As they ease off, the sellers come in. Our question becomes, what are they going to do? Okay, Fastenal, this is a industrial stock. Yeah, look at that. That's a big drop. That might be too much. I know you're like, Scott, you sound a little bit like Goldilocks. Listen, I want what I want. I want a nice steady pullback. I don't want it to be a herky-jerky like, oh my gosh, look at the sellers smashing back in. I wonder if that's Copart's not terrible. We'll see a couple of others, I think. Here's Google. Okay, Google's starting to get into this gap area at least. That's good. If they can do that, if they can get into the gap, they don't have to close it. If they get in here a little bit and then it drops back down and holds a higher low, I'm still good with that. Here's Gap. Retail's been strong, but a little overextended, like everything. IBM, it's an old friend of ours. It broke out on its earnings report and looks like it's wanting to try to go again. But all of these things, they're up at their highs. They're all overbought. We can't just think I'm bullish, let's dive in. What's your setup? My setup is to take bullish trades at or near support levels. And right now we are at or near resistance levels. At or near support levels give me an expectation that it's going to bounce. At or near resistance levels also gives me an expectation it's going to bounce, but more likely to bounce down. That's the problem. IWM. Okay. So you'll notice that that had an acceleration of volume all the way all the way to Friday, an increase in the volume. We certainly have said that we're reluctant to give the bullish market too much credence without the small caps participating. So this is nice to see. It got a pretty big reversal as well. Meta, I think Meta's done enough that I would be willing to trade the pullback. They definitely got disrupted prior and around their earnings, but they've recovered from there. Microsoft, damn, look how strong it is. That was a tough one right there, because this went up, pulled back, turned, and you can see that's valid right there. It was a little bit volatile. That was at the start of the week. That was a good one, and this thing is still moving. Nvidia is still moving. NWSA starting to pause. You've got earnings. Be careful there. Still some earnings here or there. PDD actually triggered a signal last week, but it's kind of starting to ease up. PGR. PGR actually looks a bit like it's trying to set up. It had a support level here, did not break this, but now that it's pulling back here, if it doesn't go too far before it's able to turn again, I would say that that's a valid opportunity. We're just looking for areas that are still showing strength, that are ready to break again. Here's Palantir. Palantir looks like it's starting to find some support. I don't need it to. It would be nice if it, as it pulls back, it held the gap, but I would actually be fine if it came back down into the gap a little bit and then found support. We're looking for the higher low, right? Coming out of this next. Some of you may still be in that trade. And you're thinking, what do I want to do with it now that it's kind of easing up here a little bit? Yeah, I don't see anything that's like setting up today. We're going to have to let this pull back for a couple of days. Be patient for it. Cruises, Royal Caribbean. Let's see, Carnival Cruise. Carnival Cruise is the same. I wonder if that means the airlines are doing better again as well. Probably so. Yeah, the airlines. You might want to throw an airline on there. Delta is 11 million shares a day. Let's see. We've got United. You're going to see they all look almost, you're like, are you even changing the charts? Right? That's how correlated they are. There's United. Here's Southwest. Looks very similar. American AAL looks very similar. Who am I missing? Alaska, ALK. They all look the same. The cruise ships look the same. But what does that indicate to us? That's a bit of that consumer discretionary recovery that we talked about, right? Travel's been getting beat up since early July, right? Not late, early July. Look at that consolidation, just down, 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 down. I mean, that was from 1955 to 11. That was a 40%er, right? So, but now what? Now we have breaks across the whole. I bet your hotels would probably be the same. Who are some hotels? Starwood, is it Star? No, that's not right. What are some hotels? Why can't I think of any hotels? Marriott, MAR. A little bit. Okay. The other ones we said we were going to look at. AXP, American Express, not as much. Not as much. Here is Visa looks strong again. You can see that. Here's MasterCard. Not as much. DSCV. What is Discover? Is that it? Nope. DSC Discovery Corp. Nope, that's not it. I can never remember Discover. TripAdvisor. Are we pre-earnings? That's earnings are today after market. It's gotten a pre-earnings bump, bam, bam. Now, if you're in it, you got to decide: do I put this at risk for earnings, and then live with whatever comes? You can see there's a big swell in the earnings. The earnings have been swelling up all the way until what's going to happen? This is going to drop hard, just like it did back here. It swells all the way up into earnings, and then it drops hard. So if you're long options and you hold over earnings, that drop is going to smash you in the mouth. If you're short options, if you have a covered call, if you have a naked put, if you have Iron Condor, any vague and negative strategy, you're going to benefit from that volatility drop. So here's what you have. You have the uncertainty of earnings. Is it going to gap down like it did back here? We know it could gap up just as easily. So there's a high expectation of a big move without knowing exactly which way the move is, and a high expectation that the volatility is going to drop. So the options are going to cheapen dramatically overnight. AI is predicting it's going to rise. Okay. Yeah, look, I love AI personally. I haven't seen anything yet that's that great for predictive analysis, because it's like when they predict it's going to rise, it's like, well, what time frame, for how long? The earnings is the great disruptor. Right? I mean, earnings it was looking great last time, right before earnings. Uptrending, new highs, up at 19, and then earnings came and smash. It was down 20%, and then it was down even another 10% from that. Yeah, I don't know. That's a good one. I realize the theme of my contracts that I'm upside down on were predicated on a consumer running out of money, pulling back on purchases. Yeah. And here's the thing, press. You could be right, but we have to also be right on time. The story I always tell is Alan Greenspan coined the phrase irrational exuberance in description of the tech bubble, the dot-com tech bubble in the 90s, right? He said it in December of 97. Was he right? Yeah, 2 years later. 2 years later. So, if he was like, the market's irrationally exuberant, I'm going to short it, he would have lost his ass. He would have lost everything, right? Because the follow-up is that the market can stay irrational longer than you can stay, or excuse me, the market can stay irrational longer than you can stay solvent, right? So it can just, the herd's moving, they can keep going. And so it kept going up in 98, and it kept going up in 99, and then it kept going up the first 4 months of 2000, and then it fell apart. So ultimately he was right. But that's the hard thing with broad scale things like, spending and debt and, I don't know. Okay. Watching for 6 months and doing 85 to 90%. Which AI is it, Stephen, that you're looking at? Because obviously there's a lot of different versions. So are you using like Vantage Point? Okay. Vantage Point. Yep, I'm familiar. Okay. Where was I? Another consumer discretionary, Starbucks. Look at that. I love Starbucks. My family loves Starbucks. We certainly support this gap up. We certainly do. Okay. Waiting for that. Shopify. SMCI, not much there. PLTR is better. SPY. You can see our opening range. We've stalled. We're not surprised by that at all. So if you're in bullish trades, you're starting to think, okay, I tried to give it another day. You gave it another day. You lost some time. Now what? Now you'll probably start, if you're bullish, start getting a little bit more strict even still, right? Bearish trades might be coming back. You've got some things going negative now. Press, are you still in anything that you're holding? What if you have any puts, let me know. I'd like to pull it up. Here's Tesla. Tesla gapped up and has given it all back already. Looking like we're seeing that overbought. Ooh, Upstart is one that I'm curious about. That's going to report earnings tomorrow. We'll see what happens there. The VIX is up marginally. So there's nothing about this other than, I mean, quite honestly, I want it to pull back. So, yeah. Looks like Walmart has started. Maybe has time before earnings. We'll see. COF and Amazon. Okay. Okay. Yeah, Amazon's still holding on. COF is starting to pull back a little bit, right? Starting to pull back a little bit. We would love to see that. I would love for this to recover a little bit for you and set up a new trade for me right around 100. That's what I want. I know you want further. Here's energy. Yeah, nothing there in energy. You can see we're starting to see the weakness. We're not weakness. We're starting to see the pause. Here is industrials, same thing. Starting to pull back. Staples, not quite yet. Utilities, not quite yet. Technology still showing some strength, but everything's starting to just sort of ease up. Of course it is. Look back. Look back, even on the Qs. Here's 1, 2, 3, 4, 5, 6 days. That was a pretty good 6 days. I think this one's bigger. I'm gonna measure it. Drawing tools. Drawing tools. What do I want to do here? We're gonna go low to high. So it's more, that's our full scope right there. You're gonna see that this outpaces everything else, even this one. Bigger. This is the biggest swing that we've seen from the buyers in quite some time, right? In quite some time. Let me delete this guy. So what does that mean? Let's be ready. What tool was that? That was just drawing tool. When you draw something, then you can activate it and move it. So this is, and I'll do this a lot where I'm like measuring and I'll be like, okay, let me duplicate this and measure, this move over here. And I'll start to make I'll make a composite. Well, now that I'm telling you what I do, there we go. And so then I'll be able to move this around and say, the next time it pulls back, this is what I'm looking for. Something like that, right? Helps me to visualize and really see what do these things look like, and I can say, you know what, I'm gonna make it a little smaller, but I'm gonna leave the time frame there, and that helps me to measure movements and have an expectation of bullishness. Okay, what's next? We talked about everything. We went through the whole watch list. Let's be patient this week. The buyers look overbought. They look extended. Let's see what the sellers do when they come in. Any mild pullback is going to set up a number of trades. So what you should be thinking is where, how many technology, right? Will you do an Apple or a Microsoft and a software and a chip? There's 3 right there. Will you do consumer discretionary? Will you do an airline? Airline and cruise are all going to be working the same, but are you going to do a retail like a Gap or an American Eagle or an Amazon and a travel? Are you going to trade credit and insurance in financials? There's 2 there. You can see you could end up with a heavy load. Are you ready for that? And if you're thinking I might not be that ready, what can you do? Well, you can ease. You can say, I know I'm going to have more trades, so instead of going 2% risk per trade, I'm gonna go 1.5% risk per trade. That would be a compromise to keep your overall portfolio heat in check. So we don't want that irrational exuberance. We don't want to be like, oh, it's a trading window. Let's throw everything on. Be specific, be deliberate with what your risk level is going to look like. But yeah, I'm 100% looking for a trade window this week. Got a lot of different things that I'm looking at there. I don't see any negativity like a hedge of any kind. No hedges developing out of the VIX or anything along those lines. So yeah, let's see. I would love to get a nice little Santa rally. 2 bullish windows. You just saw one, and that wasn't really even the first one. That's what's great about that. That was the convincing one. We said we're willing to take some bullish trades because we're still neutral, and neutral means balanced. Neutral means trade bullish stuff, that trade strength to the upside, trade weakness to the downside. That's balance. Now we're seeing more strength. So it's like, hey, we could get 2 strong windows, and you saw over the last week what we can do with a bullish window. Trading plan. We are on market posture. So this is where, if you're feeling weak anywhere in your market posture, let's get onto the videos. There are a number of places that the market posture exists. We have, and I said I was going to update, and I forgot to update. I'm going to get the watch list updated. So give me today, and I'll send that out, and the watch list will be updated. The market posture will be updated, and I'll make sure all the links are updated. And the links we'll have in the foundations class. There's a couple of market posture videos there. And let me show you what I mean. They haven't been put in yet, but you can find market posture here. You can find all of the videos in market posture here, and even you can find in the Trading Foundations course some market posture things there. That's what we're working on. We are working on section 2. So make sure your routines are strong. Make sure you have a strong sense of your market posture versus your trading posture, and make sure that those things are influencing the decisions you're making for types of trades, length of trades, risk management, trade strategies, how you manage your trades, and scaling tactics, etc. And make sure that you have a strong idea of at least a couple of defensive signals that will bring on hedges. If you're bullish, what's a defensive signal for bearish hedges? If you're bearish, what would a defensive signal be for bullish? So yeah, when I'm bearish, do I hedge with bullish trades? Absolutely. 100%. All right. Awesome. It's great to see everybody. Remember this. So I'm going to send today's email, and it has everything. I'm going to send a new Discord. Let's get everybody on Discord. Let's get some discussions going there. I'm going to bug you and go from there. To take links and make them easily, the links, are they not easily available, Michael? If there's something I can do to make it easier, they should be. Remember that in any email I send, you can pop in. Let me see if I even have, I send the emails to myself, of course. Let me just see. Dun, 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 dun. I thought I did. Do I send it to myself? Oh. Well, apparently, if I do, I don't know where I send it, but it's in there. Still can't find the watch list link. How do you put them someplace on a desktop? Well, because we're working with links, it's not really these are good questions. I'm glad we're having this discussion. So, the 3 core links that I send you, you're going to want to save. I know they're documents, but they're Google Docs. So they're actually best saved as bookmarks, right? So if you bookmark, this is the Market Watch group welcome doc. Now in here, there's some downloads, and those you can save to your desktop. So this current group watch list, that's just a doc. So you would just click that. You could save it as a favorite, or you could just save this as a favorite, because this has the ability to access the group watch list right here. This has the ability to pull up the historical market posture if you needed to copy and paste some numbers to backfill yours so it looks like ours. This has the ability to download the trading plan outline right here. That will be a download. That one you would then save on your desktop. This is a top 10 trading mistakes doc. That would be something that, so you can see these say download. So this you would download, this you would download, this you would download. These are all the spreadsheets and documents, and that you could download and have a folder for those. Same thing with a blank market posture spreadsheet. Here's another trading log. Then you have the content library. That would be a link. So this one you would want to save as a favorite. This is the content library. You would save this as a favorite in your Market Watch group folder. And then you could come in here and you go in, you could access the schedule, right? If you ever like, wait, do I have the right link? This is the source of truth right here. This Google Doc, MWG Market Watch group schedule and links. This is the source of truth. This will tell you the time. This will give you the link. This is in your link. So you could bookmark this and say, all right, I make sure I have the schedule. The content library. This has the trading plan videos, the market posture videos, the trading foundations course. I fell behind. I'm like, oh my gosh, I'm behind. I probably have 10 videos I need to put on here. So our entire trading foundations course will be on here. So you could go in and pick a section, right? You'd be like, oh man, yeah, I need to spend some time on technical analysis. I need to understand the stages of a trade. I want to, right? So you could dive into these things just one section at a time, 30, 40. Okay, I say 30. They're not. They're 45 minutes. They're 45 minutes. I just keep rambling. Look at it. It's 8:08. We should have been done already. So yeah, these are available for you. So yeah, but the links that I send you are in every email. I would just say it's going to be better for you to eventually save them as favorites, create like a favorites folder with all the different things that you use. We have our search tool and you can save favorites there, the Fed watch, the market analysis, right? The sector rotation, major market, all those can be stored as favorites. Brings up the content library. Oh, which one brings up the content library? Bob, which one? I might have a bad link. So if there's one that is linked incorrectly, tell me and I can fix it. Your bookmark brings up the content library. And what do you want it to be? You want a different one? You're looking for the welcome doc? I can send that link to everybody here right now. Here's the welcome. This has everything. And these will be in your emails. Just scroll down your emails to the bottom and you'll see that the three core, the welcome doc, the schedule, and the content library are always linked. You can always just go to the email and find them. I want to make it as easy as possible for you to use all of the different resources. You'll want to make sure that we're getting some good discussions. You can see in our Market Watch group, and there's going to be more coming. So, we're talking about it and getting ready to go. You can see here we've got 3 people. I don't know what this pro bot even means. I have to ask my son. Got 3 people on. We got 12 people using this feature now. I think we'll get another 10 or 12 here over the next week or so. All right, I got to run. It's great to see everybody. Tomorrow night, Foundations, 8:30 p.m. We're talking about something. What are we talking about? I think we're talking about record keeping and analytics this week. And then next week, we jump into options. Then we're going to talk about post-trade assessments, a couple of case studies, and then a Q&A session. And then we have the entire first round of Foundations under our belt. The library will have every video there, and then we'll start it again. Time zone tomorrow, Michael, 8:30 p.m. Eastern time. 8:30 p.m. Eastern time. So hopefully that works for your schedule. I would love to have you guys join, really start to get some good Q&A going in that. And then we'll loop around and do it again. Anyways, good to see everybody. Have a wonderful, wonderful rest of your day. See you tomorrow evening. As always, happy trading.